Hi, good evening, traders. This is Krishna Joshi here with 7 Points Capital. I'm going to bring you today's trader takeaways. Interesting day for SPYs, even for the tech specifically, because if there was going to be any savior for them, that was going to be Apple specifically after how Facebook and Twitter have announced earnings. So a lot of eyes were on Apple earnings last night, and even the markets sort of kind of did we did finish down because of the trade tariffs that came out after hours. Spice finished down, but Q's finished up like a third of a percentage thanks to Apple. Um, let's look at the range on Spice intraday. Uh, the after hours, this is the initial spike on Apple earnings, and then Bloomberg announced that the Trump administration is going to increase the tariffs to 25% on 200 billion goods. So we've kind of finished strong last night. Kind of finished, gave up everything from Apple earnings. We finished weak, closed down, but we opened up pretty strong. And not just that, but we had a good push early on in the morning to yesterday's highs. And because of that, what happened was Apple was able to cross 200 bucks for the first time, and it's getting closer to the $1 trillion market cap. So let's look at Apple. We traded this after hours yesterday. A couple of long setups was in the end, but the trade was long versus 194. I was watching the price action here. A lot of absorption. The bids were buying, were just taking everything, and then it was just step in front. So if someone was trying to hit 194.05, then there would be another hidden order at 94.06, kind of push it up, absorb all the shares, and we finished. So as the conference call started, we kept inching higher. So was a nice close on Apple. We were hoping that 200 would be a big level, so it was. 200 had took a few attempts to break it. There was obviously a huge offer. We've seen that in Baba when Alibaba was trying to break 200. So I knew that kind of price action, that it could take multiple attempts. So I wasn't going to jump onto it. I'm just quickly going to show you Alibaba. This is what I was talking about, where it does take a few attempts to break a big number like this, and it could easily go up and come right back down. I'm not saying this we can expect from Apple, because look at how we finished. I showed you Spice earlier, which also topped out around 11 o'clock, which is the same time around which Apple broke about 200, uh, got close to 202, and then Spice just sold off and finished in the bottom percentile, bottom quartile, I would say, on the day versus Spice, which finished in the top 10%. In fact, even after hours, it's doing pretty strong. So thanks to this, we finished strong on the Qs. But this wasn't the only one which was announcing big earnings. We had CHK, one of the most liquid energy names. It's kind of become a smaller company since the big drop in 2014. We've been trading this for a few years now. I remember especially since 2014 when I came in, the stock used to be in the 30s. We traded it close to $1.50 at one point, and now it's trading much lower. So CHK is one of the stocks that does a tremendous amount of volume. The average volume is close to, I think, 25, 30 million shares as well. So when CHK announces earnings, we're definitely watching it. So we saw this big first spike down, got a good decent pullback, and this is where we started shorting the 39s and the 40s on CHK. Got a decent chunk at 37 as well, and ended up being a good easy trade where the offer was chasing it down. So a typical SSR stock, something that we like to see, and the offer is chasing it down, and you could get decent amount of size. So I had my full position size all throughout, ended up taking about 8-9 cents on the first trade, and once it got steadier on and sideways, we ended up buying, I think, 29s and 30s on the way up. uh, Constant VWAP buying on the offer across different dark pools. So I ended up buying like not my full size, what I had on the short side. But again, I wanted to see if we can go back to the 35, 37 area, retrace back probably like 60% of the move. We ended up getting much higher than that, but the easy trade here was compared to XLE. Now, as you can see, CHK broke down after 11 o'clock, whereas XLE had already been started going down. Like look at this on the timestamp, it is 10:47. It's making another leg down to 10:51, and 11:02 it's already down to 76.10 versus the high of 76.35. So we're down 0.25% in XLE, but CHK um, is pretty much sideways on it. So this was something that we took note of, that CHK has a good lag in it. XLE is already down 0.25%, and we ended up getting full size on this trade as well. So I had a decent cover on this, especially because this was a small shakeout, but I still had most of the position. So got one leg down and the second one. We did not go down all the way into the bottom. My entry here usually is, if I'm seeing the offer is thicker than the bid, I'm usually looking to get short on the mids and the bid. And when I get a decent amount of size, sometimes in SSR stocks you won't get a full size, so you do have to chase it a couple of cents if the risk reward is still in place for me. So here, when I was risking 46 on this trade, I did not mind getting 43s and 42s. So the average price somewhere in between here, which is completely all right, because I'm still only risking 2.5 cents with the potential to make this as my first target and this as my second target in the lows in the 25s. So what do I do when I see something like this, a shakeout? Well, I'm constantly testing mids at most levels, um, testing the dark pools for midpoint liquidity if there's easy buying or selling going on. And based off that, we can have an idea about what the stock wants to do. So there's no reason to cover the full size here. In fact, I had close to 2/3 of my size. Ended up taking in the 32s and 31s on the way down, because this did feel like after this move, a sudden big drop came in, versus I was expecting a gradual trickling down and the offer chasing. Instead, this was a quick wash down, ended up taking in the 32s and 33s, and a simple trade over there. I was long here, wasn't very convinced on this trade, so not a high conviction trade. I did not have my full size, so pretty much left it alone after this one. Another one I want to go over is BIDU. They announced earnings. Google is trying to work on a search engine for China specifically, given the regulatory and compliance issues that they have. So so Google is trying to make it work, and Baidu, being the leader in this space in China, saw like definite weakness. So yesterday after hours, the stock initially had a move up and then sold off, and today morning as well, we saw like a good sell-off. This was a nice channel up, and once we saw the perfect risk reward setup consolidating below VWAP, I'm risking about 235s, putting on a feeler position, keeps coming back to the 33.50 area, and by the time it wants to go, I definitely was much more, it was a high conviction setup for me, and ended up covering everything at 29.5 on this one. So it was a quick, easy trade for me. As you can see, once this broke, I did not want to chase or add anymore, because I pretty much had like 80% of my position. I wasn't looking to add any further because it was a quick drop, so it's much more away from the overall structure of the stock. And also that it gave me enough opportunity that if I was convinced about the setup, I should have already been full size. So I wasn't going to chase it, especially because of a big 2-point drop. And then we just saw continuation. So big hit on this one, and then ended up taking quick 5.5 points on this one. So ended up working out a good trade. Another one from yesterday, day 2 continuation, was Shopify. Stan went over the setup where we went long yesterday at the consolidation at 139. Caught about 4 points on the way up, whereas today was the opposite. We saw consolidation on the way down. I did not jump in right here. Instead, I let it wick out and come back, and I was getting much closer to 37.75 and 38. In this area, I got my full size and ended up taking 35.5, just around. I don't have my executions up though, but I ended up taking 35.50 on it. It's got to be later in the day. I was still in it after the Fed announcement, so it's got to be somewhere in here between 2 and 3 o'clock. It did break 35, 75, 36 area after a lot of conviction, but the way it came back up, that's when I was sure that I'm going to end up covering my short because of the Fed announcement at 2 o'clock. Uh, Last one I want to go over is Oracle. This one had news midday that Amazon wants to move over from Oracle servers. Um, so which is why we saw like a big they don't want to continue using the Oracle platforms anymore. So once the news came out, it was trading at 67, 68. It was already down a couple of weeks. So I didn't obviously get my full size. I'm chasing it. But this is what we do. Like as traders, when news hits in real time, we sort of react to it if we have the risk reward in place. So I'm looking at 65, 67. The bid offer is just all over the place. It's going in the low 50s, coming back up, and gave me a good fill at 65. And I was risking like a 75 figure in mind. If I felt like if this was going to be another one of those news from Amazon that they're going to get into the switch business, and they really hit Cisco and ANET really hard. So if it was going to be one of those news where they come out and say, no, we are not going to switch from the Oracle databases and the platforms. So I just wanted to make sure I'm not caught up on the wrong side. So I had 75, 77 figure in mind. I'm keeping 77 in my box. If it reverses, puts in a V bottom and goes up, I'm going to cover 75s. And if it does not, I'm going to keep chasing the price down. So my covered price will be on the way down. And I ended up covering in the low 40s, and I ended up shorting in the 50s again. So those were two quick trades on Oracle. That's something we do in real time when the news hits. It's a big piece of news for Oracle, one of the bigger clients, which is Amazon. If they are going to switch, it's definitely going to impact Oracle and their revenues. So even before the companies come out, they announce, they confirm, or whether they do not confirm the news, the stock is already getting hit. And my job here is to understand the risk reward and see if this is worth my time, worth my risk management, and whether I'll be able to get out of the trade if I'm going to be wrong on it. And you have really a few seconds to decide in that moment whether you want to get short, whether this piece of news is not as big as it looks like, is it going to reverse? And you have to make a quick split-second decision. And that's something that comes with a lot of screen time, that comes with experience. And here it ended up working out in my favor. So if you end up missing out on the setup, you can always get in on the secondary move where it does end up getting close to the short-term moving averages, gives you a retest, gives you an entry on the pullback. But the reason why I want to jump on these ones here is if the stock is really getting hammered on this news, and if it keeps dropping a point or two, I don't want to miss out on the initial reaction to it. So that ended up being a decent short, a couple of good entries on it. I still shorting it here where the risk reward wasn't really in place. Ended up taking a few small losses here because I certainly had a short bias all throughout after this move, and then I left it alone on this one once it ripped up. So those are some of the stocks for today, guys. Thanks again for watching, and let me know if you have specific stocks in the earnings season that you want us to cover, because we're definitely watching a lot of names, a lot of setups during the day, pre-market action, after hours action. And we're going to watch Tesla, Fitbit for tomorrow. So it's going to be an interesting day. Thanks again for watching, guys. This is Krishna Joshi with 7 Points Capital.